Good afternoon. This is Ron Brown. It's Saturday afternoon, the 2nd of August, 2025. I've got a new look up here I'm experimenting with. I This was created by Copilot, Microsoft's AI version that comes with some of their software. So I'm just trying it out, getting a new look and seeing how it works out. Anyway, this week I'm going to uh, give you another add-on. It's going to be the August add-on, and I do this because subscribers come and go, and I only want paying subscribers to have my latest files and the file structure. So I'll show you, or I will send a link out in the email, and that link will be to the August add-on. Now, I want you to delete your warehouse views and your chart views before you install it. You do not have to delete the combo rankings or the filters, only the warehouse view, and I'll show you what I currently have. Now this week, I'm going to look at the indexes from the top down. HGSI indexing capabilities gives us insight into the structure of the market that you can't see a lot of other places. So I'm going to point out a few things that I look at using the warehouse and charting views. And this is, I guess, repetition of what I was already saying. I'm going to use my market analysis user groups. And as always, just a quick reminder, any stock index or ETF mentioned in this presentation is not a recommendation to buy or sell. All trading strategies are used at your own risk. Okay, I have HGSI open here. I'm going to do a click on the warehouse view, and I've cleaned this up a little bit. Now I've decided not to send this folder with the new installation, my working scans. And my reasoning is I'm experimenting with different views and so on. So and I may change them, during the week and so on. So I think I'm going to eliminate this with your installation. So your installation will only have this folder right here, Ron Brown Top-Down Process Scans 2025 Warehouse Views. And you'll have top-down market analysis views, top-down process views for ETF analysis, and what I'm going to use today, top-down views for HGSI generated indexes. Then there's a folder called Ron's Daily Scans. These are scans that I use every day to capture information for some of my files that are in my non-index files and my market analysis files. I don't use all of them, but they're here. I've had them for years, so I don't want to change that. And then I have all my category scans, and I kind of like this layout because if you're interested in certain aspects of the program, you can concentrate on that, and you can put your own working scans folder up at the top and drag up whatever you like to use and want to work on. So I'm going to just go in here. I'm going to delete this because you won't be getting it. And what you can do is create your own. Just new folder, indent it a couple of times. My working files, or whatever you want to call it, and then it'll go to the top of the list, and then you can go down in here, and if you have a certain category you like, let's say you like the squeeze and breakout, and I really haven't covered these, and that's something I have to do in future videos, just drag that up to the top. It's not going to change what's down here. I'm just copying it. Oh, I'm sorry, I didn't get it in the right place. So I missed, so I have to hold my shift key and drag it up to this folder. If you hold your shift key down, you can drag any of these categories up. Now, don't hold your shift key down if you want to leave these in place. Just let me put another one up here. My working files. So I missed it the first time, but I dropped it in here properly this time, and now you can see that I have both of those in my working files. This is just a suggestion, but the reason I bring this up is there's a lot of stuff in here. I know that. I realize that, but it's all useful to certain people. So if you don't want to go down in here and dig through this stuff, let's say you're interested in VPA only. So just go down to volume price analysis. If you don't want to bring all of these up, you can just drag up certain ones. Like, for example, I'll just drag up volume price analysis bullish, put it in my working files, and then these are all of the bullish volume price analysis VPA files. Now if I'm looking for these, I know exactly where they are. I don't have to come down here into these categories and dig them out. So let's go ahead and take a look at the market. I like to use the quick pick views, and I'm going to go into my market analysis user groups. I have all of the non-index groups. These are not indexed, which means even though it takes time to update, you don't have to index all of these. Whereas with the market analysis, most of these do have indexes, so it takes a little longer to update. Now I'm going to just start here with Market Insight ETFs, and I'm going to click through to the warehouse, and now I'm in my folder right here, top-down market analysis views. Use the market analysis user groups, which I'm using right now. And I'm going to just click on number 1 where I currently am. Let's just minimize this. And I'm starting with this folder, Market Insight ETFs. I put this together several months ago. And what it does is just gives me a clean look at what's happening, or I shouldn't say clean, a cross-section of what's happening in the market. And I'm sorted on raw combo, and you can see the raw combo is a percentage price change 1 day, and the Ultra VIX was up 1.95 or 12.6% for the day. Gold was also up. 20-year Treasury bonds were up, or the TLT, because yields, they're anticipating yields are going to come down because of the poor jobs report, and even though Trump thinks those numbers are manipulated, they're not. It's just an excuse for a poor performance in the job market, and in my opinion, it's only going to get worse. We're just seeing the beginning here. You can't lay off hundreds of thousands of workers from the government and also get rid of a lot of immigrants who are doing very productive work. I know that's the case here in Nebraska. You can't get rid of all those people and then not suffer in the jobs market. So anyway, I think we're really just starting to see the effects of the tariffs and the layoffs right now. From what I read in an article yesterday, it's almost impossible to manipulate the job numbers. You would have to have about 75 to 100 people that are in different parts of the country all collaborating and working together to change those job numbers. So that's just an excuse for poor performance. Anyway, you can see where the strength was, where the weakness. S&P, oil and gas down, Bitcoin, trust down. I thought Bitcoin was going to go to the moon, but that isn't the case. Here's USO, NASDAQ, consumer discretionary. So you can see, get a quick read on the market just with this by using this view by itself. That's why I put it in there. And then the next thing I'm going to go down to is a different view. Actually, let me use the quick pick here. I'm going to go down to, by the way, you can use this view, which I just had up here for those ETFs, or you can go down here. I have a specific folder. with little different scans in here. These ETFs have weekly options. If I click back through to the warehouse, you can see which one of these have weekly options. There's 22 when I click on this. When I go up here, what do we have here? There's 32. So this just eliminates, if you're an option player and you would just want to concentrate on ETFs with options, just come down here and use this view here. Now I'm going to go down to the top down process views for HGSI generated indexes. And I have to drop down a level here. I'm going to major indexes updated weekly, equal dollar weighting, and I also have one for market cap weighting. I primarily use the equal dollar weighting, and what it does is it immediately pulls up these indexes which are created by HGS Investor. And you can see that the NASDAQ was up slightly with equal dollar weighting. Let's see what the number is when I drop down here to, I'm sorry, wrong place, to market cap. It's 2.1 on equal dollar weighting, and look at this on market cap weighting. You can see that the numbers actually change. So whatever you want to use, I primarily use equal dollar weighting because most of the people that use the software do use equal dollar weighting, but you can go back and forth. And these are indexes that I try to keep updated weekly because there's always changes in, like the S&P 1500 and so on. So speaking of the S&P 1500, let's take a look at it. You can see that here it was down 1.4% with equal dollar weighting. And let me close some of these up here. And if I'm just looking at the industry group, here's the HGSI industries. I'm going to change to the industry group, and you can see there's 173 groups. There's actually 172, and then I index all of them to create a master index of everything combined. Now, when you update files, all of these need to be indexed. That's why it takes a certain amount of time. But I don't mind that. I just start my download and I do something else until it's finished. And also, when the software is updating, it's generating all these, for example, VPA flags and signals. So all of the work is done, and then we have tremendously fast scans when we're scanning either end of day or intraday because all the work's already been done. So let's see where we stand here on a day when it was very negative, but not as negative as I thought it was. Like I said, I was out of town yesterday, and it just looked horrible on the news, but it was about a little over a 3-to-1 down day, which I thought it was a lot worse than that. So looking at this with the sort on the raw combo, which is a percentage price change one day, you can see that home builders were actually up yesterday 2.6%. Now why is this? I assume it's because the crowd thinks that interest rates are going to start coming down because of the poor job numbers. But the problem with the home builders is they're so short-handed anyway, so that may not happen. We'll just have to wait and see. But you can see out of the 173 groups, that 20 of them were up for the day. And if we go down to the far end of it, just by clicking over here in this part, you can see the ones that were down the most. And technology distributors were down. Oil and gas, we saw that looking at the ETFs. But it's just a quick way to get a read what's up and what's down. If you go full screen, it's even a little bit nicer. But getting back to the home builders, if I change to the industry group, I can see where the strength was in Champion Homes. is up the most. Why is Champion Homes up the most? Because I believe they build prefabricated houses, and that is supposedly the solution for the lower to middle income people who want to buy a home, and it's probably good thinking. So this is up 6.5%, and you can see that one of the large builders here is down 7.7%. But the earnings, that's the last date. I don't have the earnings in this view. So I've opened this up, and I'll just drop down here to the end of day percentage price change up, look at the stocks that were up for the day, and then I do have the earnings due date in here. Champion Homes is coming up this next week on August 5th. And a lot of these have already reported when the numbers are that far out. Some are not available through bar chart, but you can get a quick read on what's happening. So let's just bring up Champion Homes, and you can see it's a pretty beaten down stock. And I'm just looking at the growth numbers here. Revenue in millions, 593 million for the last quarter, up 4.8%, and yet this stock has really fallen on hard times. This dotted gray line here represents the industry groups. This is in my favorite charts, and I just like to get a quick read on how a stock is moving relative to its industry group. It looks like this one's been pretty well shaken out, and it's under accumulation now. As long as the support holds above this area here, this is all accumulation, and we did get some volume coming into it. And like I said, the earnings are coming up later this week. So it might be worth watching. I was expecting to see losses. Oh, I'm sorry, I hit the wrong thing here. Hit it again. Can't get it straight. I was expecting to see losses here with this kind of a move down, but maybe the drop, these quarters were much better with acceleration, and then it fell off here in the March quarter. But just by looking at these industry groups and going top down, you can get a feel for which of the stocks in the groups are moving up and which are moving down. I have end of day up and down here, and I'm going to go back to this area here. HGS index is up, and then if I move back up to the industries here, this way I'm only looking at groups that were up for the day. If I want to look at the ones that are down, I just segregate them like this. So it's actually pretty intuitive. This is interesting. The volume change was up. Percent to the 90-day moving average was up on home builders and also on mortgage finance, which these kind of go hand in hand, home building and mortgage finance. And you can see there was a pretty big volume in this industry group also. Okay, I'm going to go back. I'm going to bring the designer up. And this is where I am right now in the equal dollar weighting. Now, if you want to look at individual sectors and so on, these are HGSI sectors right here and specialized indexes. You can just click through here and you can see the consumer staples and healthcare and utilities were up slightly for the day, whereas these other views, and I've added I put a couple of other three indexes in here, which are about hot groups, and you can see what they artificial intelligence, quantum computing, and Oh, this is ETFs, and then this is stocks. So I just kind of lumped them in for these sectors and specialized indexes. And then you can go on down to, if you want to look at the top down, change to the index group. This is consumer staples. And then I could go down here to the end of day. These are the stocks that were up in consumer staples, and it's sorted on percentage price change one day. Now looking here, you can see that Kimberly-Clark was leading. Volume was very high. The spread was wide. It closed in the mid-range. Dollar General, above average, very high. And you can see on Kimberly-Clark, it gapped open, traded up, and closed down in the mid-range. So this stock here, Dollar General, should be much more bullish as we look at it. And you can see that it was above average volume. Looking down here, there's the average volume line. Let me make it, well, I better leave it this size. Spread was above average and closed very high. So Dollar General is one of these stores when the economy softens, especially in small rural towns. That's where everybody flocks. So this stock has been doing very well. Now, I don't want this video to get too long. I'm just kind of giving you a cursory rundown of what I do. What I want to get back to my market cap. I want to get in here to my equal dollar weighted. I want to look at the S&P 1500, and I want to go through some charts and show you what I'm seeing. I'm going to click on the quick pick, and then I'm going to go to folder number 2, HGS index charts, and we can run through these quickly, and then I'll end this video. But you can see that the A and E accumulation distribution, the E shot up through the A's, and then now it's D accumulation. The A's and B's went down through the D's and E's as the market was selling off. Going to go to the next one. It's fairly similar, but you can actually see the rotation of the individual A, B, C, D, and E. The explanation's over here. Money flowing out of the B's and A's. The C's are flat, but you can see stocks are flowing into the D's and E's. Go to number 3. I'll bring the quick pick up so you can see what I'm doing here. Okay, this just shows accumulation distribution. You can see how it was A accumulation, then it dropped to B, and then quickly, as the market was selling off, to C and then to D. This is just AD velocity and accumulation itself. These have dipped below the center line, and the shaken has also turned negative. So we're seeing a lot of negativity so far. Now this one is just, I devoted this window to the AD line, and you can see the advancing. This is the S&P 1500, remember, 337, 1162. Percent advancing, 22.41. Percent declining, 77.26. So that's almost a 4-to-1. I thought it was closer to 3. Minus 825. Advancing versus declining volume was negative, pretty substantially negative, and the advanced decline volume was, well, it was 4-to-1 negative. And this is, of course, on the August date. And this is the percentage above the 20-day moving average, the 30, the 50, and the 200, and these numbers are right here. It gives you the percentage for that day, and you can see how these have fallen off. And before the market ever really started selling off that hard, you can see that, let me bring an arrow up here. that this had peaked out. Had already started to go down. There was deterioration in the broader market, but it was being propped up. So that you can see that very clearly there. If you want the actual numbers for those days, do an alternate I, and you can click on any date, and then you can get the percentages on that day. As I move this, watch these numbers here. You can see they're changing. So it went from a high of the percentage above the 20-day of 82.45 to 25.20. It's dropped considerably. These are my potential buy-sell signals. You can see these are potential buys right here, 2 of them, and it's been on a pretty good run since then. And now we're getting a potential sell signal. These are rows rather than bright red because the numbers didn't get up to at least 5-1 on the AD line and the AD volume. But pretty substantial warning here. Volume was up. I'd be very careful for the next few days about initiating long positions. Who knows what news stories are going to come out about the jobs numbers and fighting with the Fed and so on. It's a mess. Anyway, this is the same one without the moving averages, and this here is the same thing, except I decided to put the histograms in here so you can see when the 3 cross the 6 down and so on, then the 6 and the 18 and the 1850. Just a couple of charts. AD line, percent above the 50, just a different look, and then you can see the VPA trends. If you click on this, you look over here, the trends are long is up, medium's up, and the short term is down, and it's a light green. Index internals, again, I just put them up here in a window so you can get a quick read on any index what the internals are. I'm on the S&P 1500, but if I switch to the 500, you can see the numbers change automatically, reflecting the index that's in there. So I'll go back to the 1500. And then this is just the force indexes plus the histograms. McClellan oscillator was very strong up here. Here's a summation index, but the McClellan oscillator is getting down into oversold territory. It can stay down in this area or go lower like it did here. And this is just accumulation acceleration, I call this chart. It shows the trends and accumulation distribution and the actual acceleration and deceleration with the velocity. And then this is just a weekly version of the chart. You can see that it's white here because it needs 120 days before it starts generating VPA flags and so on. But here's a VPA flag on the weekly. High volume down bar after, whoops, sorry about that. After an up move indicates weakness. Let's go to the daily chart. And interestingly enough, there's no VPA flag on here, but there is on the weekly. Okay, I'm going to wrap this up. It's getting a little bit long. I wanted to get something out to you, and primarily I want you to know that you have to delete your chart views and warehouse views and then install the new add-on. Thank you for listening.